Wonderful. Good morning here from the Prime XBT Trading Academy studio. It's, September the 7th, and this is this week's first episode of that crypto show. And today, as always, we have put together some great content. A lot has happened over the weekend. A lot we need to talk about. We need to talk about where Bitcoin will be probably heading this week. We need to talk about our game plan for 2021 and where the chances and danger in current crypto positions are lurking. My name is Dirk Hartig. I'm the head of trading education here at primexpt.com, and I also have the honor of being your host on today's show. Before we start, as always, our risk disclaimer. This webinar is brought to you and provided by the Prime XBT research team. We intend to educate you. We don't intend to give you financial advice. So it's always important that you do your own due diligence. This is not financial advice. Our mission here is to make sure that we point your head into the right direction so you can make your own better informed trading decisions. That being said, let's jump into the fun for today. And today we are going to start as usual with Bitcoin. And you probably have seen last week's episode where we kind of discussed how to prepare for certain events unfolding in Bitcoin. In the last episode, we were still in that area here. So we were trying to crack this resistance around 50,000. We did so over the weekend. So September 5th, we really had this nice, I'm not going to call it volatility squeeze, but breakout to the north here. And the band, however, as I said before, is quite narrow. So expect a little bit of resistance up here in this area between 53,700 and 59,000. And this area is so big and there is resistance because of what was happening in May on the blockchain. So when you look onto the blockchain, onto the blockchain, onto the Bitcoin blockchain, you can determine where are areas where people bought coins, where are areas where people sold coins. And you don't have to do this actually yourself. So there's a weekly report coming out by a company called Glassnode. It's called The Week on Chain. And last week, they had this UTXO report of realized price distribution, which showed us that in the area between 53,700 to 59,000, there were around 1.34 million Bitcoins accumulated between March and May that are still holding unrealized losses. So these were people that bought maybe on the way up back then. So on the way back up here, let me switch this to auto. It's better to see on the way back up here. So from round about March to May to the all-time high, or that sold a bit on the way down already. I sold that starting accumulating on the way down. However, these coins still hold losses. So what we need to be prepared for now is that once we maybe start entering this area, we are going to see some more sell pressure. Sell pressure meaning those are maybe investors that are happy, that maybe think like, oh my God, I jumped onto the train back then with Bitcoin. And Bitcoin was down to 30%. I almost had 50% of losses already. Now we're up again. I want to sell. I don't want to see this ever again. So be prepared that, of course, not everybody out there is holding Bitcoin long term. So we might see some pressure. And what that might lead to, we're going to go into detail later in the show when we come up with a new game plan for this week, how we would like to maybe position ourselves and how to prepare for certain trading events that can unfold maybe this week, maybe next week, maybe even only the end of September. But, better be prepared for what can happen out there. Let's have a quick look also at Ethereum. And if you watched, I always like to say that if you watched last week's show, we said like, oh, we had this very strong bullish breakout here over this resistance line at around about 3,365. So the sideways moving area that we were in a long time, not actually that long, but a couple of weeks. We broke out to the north. I said back then, this is a very bullish signal because it was done also with a significant above average volume taking place, which you can see down here. And yeah, we were pretty right about this. But I also said the sign of warning there. In Ethereum at the moment, we see very high gas prices, so very high in transaction fees. I don't have a screenshot now prepared anymore, but like go back to last week, watch the show. I think it was on Thursday or Friday. Maybe going to put in a link here later on YouTube or Twitch for you, and we had with crazy screenshots of people that wanted to transact like $80 and had to pay like 2,000 or 3,000 or 4,000 US dollars in Ethereum in gas and transaction fees. So seems like the Ethereum blockchain is very congested at the moment, and if you want your transaction to be validated and processed in a very short time frame, this is like 30 seconds to a minute of time frame, you're going to pay very high prices. Haven't looked today into how that developed, but obviously, like I said, but then it's due to this NFT hype, this non-fungible token hype, where people, are buying pictures of rocks and other things for crazy amounts of money. And of course, if like there's something where people are throwing really around money, pardon my English, I know a lot of people made a lot of money with NFTs, and I'm happy they did so. But it, of course, if there's a hype, a mania being created, this will slow down transactions significantly. And we had the same, by the way, in this crazy move back then in Bitcoin in 2017. So let's have a quick look at the sentiment at the moment for Bitcoin or for the crypto market in general. We are seeing a sentiment of extreme greed here, 79, and this is from yesterday. So the last one hasn't come out yet, or has it? Let's have a quick look. But it can only be higher, and it hasn't. No. All right. So 79, extreme greed. But what does that mean? We are very much more likely to the market to react to the upper side than to the downside, meaning you will see more green candles or larger green candles normally than red candles. And if you look at the last days where we already were in the, somewhere in between there of greed and extreme greed, you can actually see this is very true. We had a lot of green candles, and the green candles all larger than the red candles. However, when we enter this area of things being extreme, it's always very important to become cautious, because the mood can flip up over very fast from extreme greed to extreme fear. These areas of extreme greed may last for days and weeks onwards. So I'm not saying, please don't get me wrong here, you should sell everything right now. I would never say this, by the way, anyway. But you gotta be prepared that this sentiment can flip very quickly, very fast. And we saw that just end of July when we entered this new bull phase we are still currently in. We saw the sentiment within a week and a half or two flip from extreme fear to greed again. So things can happen very fast, but it's important still to have the sentiment in the back of your mind, because if you want to day trade, so if you want to go into the lower time frames, maybe the 15 minutes, and you might be trading something like Bollinger Bands, for example, it's important that you see there that you might consider that you probably will have an easier time at the moment trading long positions, because this is the market expectation. And if you day trade into the in line with the market expectation, life usually will become more easier. I say usually because this, of course, is not like trading always is a 100% gain. Yeah, there are no decisions that are 100% correct all the time. So important always to have a stop loss and a take profit, aka a game plan ready. So everything we do here, you also should do, especially when you are planning on day trading the crypto markets, which are very volatile. I would like to have a look with you this week on the newest report of Glassnode. And from this, we are going to deduct some findings and translate those into what might be the nearest possibility of Bitcoin either going further north, maybe even breaking this area between 53.5 and 59,000, attacking all-time highs in the week or in the next weeks to come, or what could be our plan B if this not happens, and if the sentiment really all of a sudden goes south again to fear or extreme fear. And this can happen very fast. Like I said, all it needs is like a black swan event, something like Elon Musk twittering something crazy again, a country like China banning Bitcoin, maybe El Salvador suddenly deciding, oh, we don't want to have Bitcoin as a legal tender because today is the day where that starts. And I know there are a lot of communities out on Twitter and Reddit that plan to buy $30 worth of Bitcoin for that today. So that could have an impact on the market. We'll see about this later throughout the day. But let's have a look at this week's on-chain report. And keep in the back of your head the findings from last week, that we have those three areas, two of them which are support, one of them which are resistance, and I put those into the chart here for you. So keep those, please, in the back of your head. Those will be of importance later when we are going to make our game plan for this week. First of all, most important, a sip of coffee. There's no morning complete without at least 2 coffees. It will probably bring me into my grave eventually. So let's have a look at the Bitcoin hash rate. So we are seeing a very steep recovery of the hash rate. The Bitcoin hash rate is the power of the Bitcoin network. The higher this hash rate is, the more miners are participating in the network, the more decentralized it becomes. So the higher the chart goes, the better it is for Bitcoin. And what we saw here after China banned Bitcoin mining, of course, was a decline of the hash rate, because a lot of Bitcoin miners were sitting in China and maybe are sitting still in China. I don't know about this. And of course, when they had to take their mining rigs off the grid, we saw a very steep decline in the Bitcoin hash rate by almost 50%. What happened then? And from end of July onwards, we saw probably what we can call a migration of miners leaving China, going to more, let's say, crypto mining friendly countries. And one of those countries, by the way, are the USA. And a gradual increase of the hash rate, again with mining grids coming back online. And this can be due to miners that moved, for example, to the USA from China or other countries that are more crypto friendly. This can also be due to old mining rigs that suddenly are profitable again, so that produce more Bitcoins when they consume in electricity, when they cost operating, coming online there. So this is probably a mix of reason. But it's safe to say that we are seeing a recovery. And interestingly enough, we saw also during this time, since July, that miners were accumulating a lot of coins. So miners were not the bitcoins or large portions of the bitcoins they accumulated every day. They were not selling onto the market. They were holding onto them, probably because they believed in higher prices. Probably parts of the reason also because mining had become more profitable for them. You know, if a hash rate is halves by 50% or goes down by 50%, so it really halves, of course you're going with your current setup, and if you still have this same hash rate, you're going to mine more Bitcoin. You're going to get a bigger share of the cake every day, of those 6.25 Bitcoins being mined around about every 10 minutes. And you might not need to sell all of those to cover your costs. So they held on to to those coins. And what we are seeing right now is that this number, which usually oscillates between plus 5,000 a month and minus 5,000 a month, minus being minus flow more coins onto the market, plus meaning they hold onto more coins. We are seeing this returning to neutral territory again, which also, in my opinion, is an indication that the profitability of mining is returning to what it used to be before that again. Then another thing we want, like a very important chart here also, guys. So this is looks a bit, like a rainbow, but it looks at what transfers are done in terms to volume. So, for example, the red thing you see here on top, the red color, is a volume between 0 and 1,000. So if I, go onto the market, I buy Bitcoin for 500 US dollars and transfer it into my wallet, I will be in this group up here in this red group. And what we've seen over the last years, and this really popped into my eye this morning, is that the group down here, which is the group that are transacting volumes above 10 million plus, has been rising by quite a margin since October 2020. And you remember October 2020, let me zoom back here. October 2020 really was when this current Bitcoin rally was kicking off. So this was the start of a current bull run. And coincidentally, this also was the start of where those Bitcoin wallet addresses that hold 10 million plus Bitcoins, US dollars worth in Bitcoins, started accumulating. And this, of course, is not your typical everyday retail trader or you're also not your typical everyday high net worth individual. Those are, in my opinion, institutional investors. So those are the JP Morgans out there, the Fidelities, the BlackRocks, and so on and so forth, that are currently accumulating Bitcoin. And of course, you don't see that yet so much in the press because you don't want to give away your game plan. If you are running a hedge fund and you have, like, let's say 250 million US dollars assets under management, and you decide for yourself, I think my hedge fund should put 20 million into Bitcoin. You're not going to go onto the streets and talk about this. You're going to transact this first and then talk about it. And this is what we see from companies like Twitter. This is what we see from companies like MicroStrategy of Michael Saylor, that has become more of a Bitcoin fund than a software company, in my opinion. This is what we are seeing from JP Morgan, who are currently setting up a fund that is going to buy Bitcoin, that enables their clients to buy Bitcoin over this vehicle of a fund, and so on and so forth. So when people tell you there is no institutional interest in Bitcoin, institutional interest, so the big corporations, the pension funds, and so on and so forth, you can show them something like this and say, okay, so who's the person or the institution with 10 million plus dollars in their pockets that are starting to buy? This is not one institution, those are, of course, multiple institutions. So this is, in my opinion, very, very interesting. Another thing, last one, and this for me is a bit of an alarm sign at the moment for Bitcoin, is the futures open interest. So the amount of or that is traded at the moment in Bitcoin with leverage. What you usually see is, in times where you have a very high leverage in the markets trading cryptocurrencies, and this is, by the way, true for probably 99.9% of the markets out there, for 99.9% of the asset classes, you will eventually see a big move into the opposite direction. And at the moment, it looks like that the majority of the market, when it comes to Bitcoin and is using leverage positions, is long. meaning they bought Bitcoin, and maybe if they have, let's say, 10,000 US dollars they are using to buy Bitcoin, they use leverage and buy maybe for 50,000 or 100,000 or maybe 500,000, utilizing the leverage. And this is good as long as the market runs for you. So on the way up, you're going to earn this leverage translated also in profits. So if you use a 2-to-1 leverage, of course, you're going to double your profits. If you use a 10-to-1 leverage, your profits are going to be tenfold on the way up. But it becomes a problem once the market tilts into the other direction. And this can, go very quickly. And this is exactly what we saw in May. The market was leveraged long. So we really peaked up here at 15 billion US dollars in leverage. Currently, we are at 11.8. So still a little bit of room if you want to interpret things into this direction. But what happened then is we had those tweets by Elon Musk saying Tesla no longer accepts Bitcoin. Bitcoin is not good for the environment, jada, jada, jada. We had again China banning Bitcoin mining and really putting the hammer down there on the Bitcoin miners. And this led to a cascade of forced sellings. And you can see this very well in those crazy candles to the downside we saw there in just a couple of days. So that was here in that time frame. Really super candles where you had down days of 10, 15, 20, 30%. And this happened because all those positions that are speculating that are leveraged and speculating on further rising markets at one point are forced to liquidate because they run out of money to cover their losses. And this can, of course, happen very, very quickly when you trade with leverage. That's why I always say leverage is something great and you should use leverage, but you should use it in a decent amount. So never utilize your full leverage, never utilize your full margin. You always need to have still some powder in the keg in case the market does not do what you expect the market to do. Very important, and a lesson probably every trader out there has to learn the hard way eventually. So to make things short here, we are seeing rising open interest. We are seeing a rise of leveraged positions at the moment. That should be a little bit of a warning sign because if the market goes maybe down by 5% or 10%, and we all know this can happen very quickly in cryptocurrencies, we could see a possible cascade of selling, bringing the market further down. And the same thing, but actually worse. So we are actually at a new all-time high when it comes to Ethereum there. So what is true for Bitcoin is even more true here for Ethereum because the market also here is net long. So most of the traders are speculating on further rising asset prices. And that brings me back to my chart and the resistance area here. So the game plan at the moment can be the following. If you still believe that this market is further rising and this market is going to significantly attack this zone here, well, then you should be long, of course. That is your decision. But you should have a stop loss somewhere around this area of 50,000 if the market continues to fall again. Should you speculate on the short side? I don't think you should, because we are still in a market that rises. We are still in a bullish market. Even if we drop back into this area of 48, 46, even if we drop back into the area of 42 or 40,000, which would be a decline of, what is that, like 10 to 12%. It's not that much, actually, isn't it? And at least when it comes to Bitcoin, it does not mean that we are entering a bear market. So in my opinion, trying to short the market here, trying to play the game that it will bounce off of this area of resistance is very, very dangerous. And the thing I'm probably going to do for myself here is that I'm at the moment not further accumulating coins, that I'm waiting how the market is going to behave. Are we going to see candles with a lot of volume, and we don't see that high volume at the moment as well, piercing through this area? Well, then I'm happy to buy if I really see, okay, this is not a resistance anymore. The people that bought their coins back there are still holding on to them. They don't want to sell. I'm happy with that. Great. But if I'm right about what I'm saying here, and my expectation comes in that sooner or later in September we are going to see a pullback of the market, and I'm not saying like a pullback down to 30 or 20,000, but a healthy decline again, which maybe leads us into this yellow box again, maybe even leads us a little bit further down. I'll be more happy to stay here and start accumulating coins again somewhere in this area. If I'm wrong about this, of course, I have to accumulate probably when we break here north of that. So these are really the two scenarios that are, in my opinion, going to play out in the near future. I'm a bit biased at the moment because traditionally, if we look back throughout the year, September has always been a month for Bitcoin, or most of the time been a month. There is no always in trading, as I said. Most of the time has been a month for Bitcoin where we saw lower prices. This is also in line with what we see in forecast from the stock to flow model. Or the founder of the stock to flow model, Plan B, who says, I think we could see something, the worst case scenario for September should be something around 42,000. And so my game plan really is here, see what happens now. If we really go to the lower side, I personally, for long-term storage, going to start accumulating coins again in this white circuit area. If we go north and I'm wrong, well, okay, then I lost like around about 5 to 8% of a move upwards. But at least I'm very sure then if we pierce through this resistance that the market is still very, very strong. This is my game plan. So really, again, no financial advice. This is how I, as a trader with 20 years of experience, are approaching the situation at the moment. It's, of course, again, very, very important that you make your own trading decisions. So please do not just blindly follow me. Even though I have a lot of experience, doesn't automatically mean that I'm always right all the time. And trading is not about being right all the time. Trading is about having a game plan and playing with probabilities. So this is what I'm doing here at the moment. So yeah, let's see how this plays out. And if you have a question, if you have a comment or anything, please, you can either do so by leaving a comment if you're watching here on YouTube, maybe later when we upload this episode. Please leave us also a like, subscribe to our channel, and you also have of course, the possibility of getting in touch with us by email under academy@primexbt.com. We are going to answer every email that is sent to us. So don't worry, there are no dumb questions. If you feel insecure about something and have a question there, how you should approach certain things, please feel free to write us. Very happy to give you a tip there. And if you're not doing so already, please also follow us on Twitter under px_academy. And yeah, that's it for today. We are going to see each other again tomorrow at 10 a.m. CT. Until then, please remember always to use the stop loss and take profit and stay safe. Goodbye.